Thank you so much, Mr. Aziz, for giving us an overview of Blue Ocean. GCC VAT is knocking on the door. We have a very professional here who fully understands the implication of VAT on businesses, not only from accounting but business perspective. Ali, the speaker of today's session, is one among them. I can assure you, you don't have to look at your watch for the next few minutes. I won't say much about him as he speaks for himself. Ladies and gentlemen, please welcome Mr. Ali.
I hope you can hear me. Yes. No, you can hear me. Now you can hear me, I believe. Now you can hear me? I hope so. Okay, great. Welcome to the training on VAT. My name is Ali. And DG has given a big challenge that you're not going to see your watches for the next 2.5 hours. So I'll try to be up to the mark. First, I would like to ask a question. How many of you belong to the accounting fraternity? Please raise your hands. All right, great. And how many of you belong to the procurement, supply chain, and logistics side? All right, great. One of the biggest challenges today, which is difficult to be classified as a challenge, is VAT. So if you ask a business organization today, one of the most difficult questions, are you ready for VAT? That's the question, are you ready for VAT?
Yes.
This is not the answer what they give. They ask a very rational question. They say, what do you mean by ready? We are all ready. We get ready in the morning, we go to offices, we work there. So what else do you expect from us to get ready? And there is a very big question for the organizations. What they need to do to get ready? Why? Because if you ask the finance professional, there is a problem. The finance professional in this region has never interacted with with taxation. For a very long time, or especially the people who are working for a very long time in this region, they have forgotten, even if they have worked with Big Four, they have worked with accounting companies. If you ask them today, their memories has vanished everything with the name of tax. If you ask them tax, they give you a very blank look, even though might they have worked for a very long time. There I can see a lot of youngsters, which is very appreciative. Why? For a long time, I myself have spent a long time in the field of finance, taxation, business processes. I have noticed that rarely you get an opportunity to get a boost in your work, in your career. And the life is very smooth. You work, hardly there is a change. Hardly there is a situation when you get an opportunity to get a big jump. Interestingly, now you have got this opportunity. How? As a finance professional, as an accountant in this region, like our mobile phones, we are 1G. We are the first generation of accountants here. So what is the first generation of accountants? Those who know about accounting and finance. For the last few years, we are entering in the second generation of accountancy. Can anyone guess what is the second generation here? I am specifically talking about the GCC region. We are going to have the second generation of accountants. How? No, the second generation was the IFRS and GAAP implication. People were learning the implication of IFRS. There are a lot of finance professionals here in this region who don't know much about the IFRS, who don't know the application of it, who don't know what changes are going to be made because of IFRS 15 and 16, and what may be the new scenario in leasing and blah blah blah. So that was the second generation of accounting. Interestingly, we are entering in the third generation. And the third generation of accountants are tax experts. Around the world, accountants are highly paid professionals. Unfortunately, except in, what is the reason behind it? Why accountants are not highly paid? The reason is this: around the world, the primary job of accountants is to save tax for the companies, to save tax for businesses, and they save tax in millions. And what they get out of it? A peanut. But that peanut is a huge amount of their earning. Around the world, accounting professionals prefer not to work for companies, but to work for firms. Why? Because they learn the hardcore skill of taxation. Why? Because taxation is a reality. If you are a right tax professional and you know the dynamics of tax, you are a professional. You're a skillful person. And this is exactly what this market needs today. I believe if any one of you go and switch and go for an interview, the first question you are going to be asked for is, do you know how to implement VAT? And again, previously we used to ask for degrees. In the next 1 or 2 years, the accounting professional, the first question will be asked, what do you know about VAT? Do you know? Ask yourself. The answer will come from inside. But this is not the big question. The big question is, do you really want to know? Ask yourself this question. Do you really want to know what tax is? Why? Because in the next 2 to 3 years, in this market, only those professionals will develop and grow who know about taxation, who can stand up in their company and can say, well, I am the tax guy in the company, I want to be the tax champion. I know it's difficult. It's very difficult and to bringing your job at stake. But this is the time to change. This is the time to jump many stairs in the ladder. Maybe you are the guy who's not in a senior position in the company. But tomorrow, maybe you are the person who's going to tell your CFO that, well, let me tell you how to do it. Right? So this is a game changer. VAT is today a game changer. We all need to know what VAT is. But again, ask yourself, do you really want to take this opportunity in your career that in this region, I'm saying not UAE, I'm saying the region. This is a great opportunity for you. Stand up, learn as much as you can. Unfortunately, this learning is very limited in this region. Why this is limited, I'll tell you again. There are two businesses. One is the accounting services and tax. And the other one is tax consulting. A lot of trainings are conducted by the tax consultancy firm. I have attended many training, many seminars, free seminars, paid seminars. I just want to see what is going to be delivered to the participants. What the trainer really is handing over by the end of the day when you are leaving. And the interesting part is that I have met a lot of people who know a lot about VAT. But all what they deliver is nothing. Why? Because this is the business model of consulting firms, including the Big Four. They tell you about all the similar stories, what you already know. And I believe there is no sense of going to these places and to see that what they are saying to you. Why? Because go to websites and just see everything is written there. So it means there is something which is the real business of VAT. What is the real business of VAT? For example, if I ask you today, okay, let's start VAT. Let's start implementing VAT in your organization. So you will ask me a question. You will say, what's next? How to start it? Right? That's the challenge. How to trigger it? Why? Because there is a built-in problem. The legislation is not there. The question is, do we really need a legislation today to start VAT? The answer is no. I don't know why people are so desperately waiting for legislation. Legislation is not the key or not the starting point of it. We are already delayed in the starting point. Why? Because the professionals are not there in the company. If you ask the finance guy, okay, start. He says, start what? I mean, because it's a blessing in disguise for him that the legislation hasn't arrived as yet. And you ask him start, he don't know. He really doesn't know what to start. So what to start? That's the biggest question. And that I will show you in the presentation. I will discuss it to you one by one, and I will tell you how and what to do. VAT has 4 important areas. Look at this line. If you see, interestingly, the first part is not VAT accounting. Why? Because VAT is not an accounting issue. The simplest and the easiest part in VAT is VAT accounting. Why? Go take out any book of VAT. There are hundreds of books. Go online. You will understand what VAT accounting is. How zero rated, how standard rated products are accounted for in the accounting system. So the starting point is something else, which is understanding VAT. Again, how we can understand VAT when there is no legislation? We don't need legislation to understand VAT. It means there is some underlying story which is the business of the consultancy firms. So if you ask me as a consultant, the first part I will not explain it to you. Why? Because this is exactly what I am going to say to the businesses. Why? Because I'll do the impact analysis. I really don't want you to know how impact analysis is done in the organization. If as a consultant I will come up with a dollar figure in impact analysis. Why? Because this is exactly what businesses are asking today. They say, what is the dollar impact on our business? What is the marketing impact on our business? What is the sales impact on our business because of this? And this is the first part of it. Do we need legislation? The answer is no. So what we need to know? We need to understand what is impact analysis and how it can be done, which is called understanding VAT. The second part is VAT accounting. VAT accounting is a bit challenging, but still, I'll tell you, we do not need a legislation. Why? If you go to the website, you will find out that there are some basic food products which are tax exempt. Are you selling these products in the market? This is the question. So they may be exempt. Previously, what happened in other countries around the world, education and healthcare is an exempt supply. Exempt supply means they are tax exempt. It means they don't need to get registered. They don't need to do any reporting. But interestingly, the UAE government has announced that education and healthcare will be zero rated rather than an exempt supply. Why is this so? So the first question is, why VAT is there? Why VAT is there? 5% is nothing. Maybe the government cost of running this 5% VAT is nothing. Government is not going to make a lot of money out of this GDP. So what's happening around? Basically, this is the starting point of the tax regime in the system. So what's going to happen? The companies are being brought to the tax net. It means what? It means today all companies will come in the tax net. They will start reporting over a certain period of time when everybody will be in the tax net. How we can say this? Because the threshold is so low that even a bakala next to your house will be tax registered. Why? Because at some point of time they will have to pay corporate and income tax. And if you start corporate and income tax, it's a big challenge for the government. So what's the starting point of it? The best way is to bring everybody in the net. That's the first step in the taxation when the countries convert themselves into the tax regime. That's the starting point. Why 5% is there? So that everybody comes inside. People don't hide it, which is not a possibility, but countries, because when we say it's a GCC VAT, countries like Saudi Arabia, whose economy is many times greater than UAE and Bahrain and Qatar and everybody, it's very difficult for them. Why? Because there are villages inside. I've been very often to Saudi Arabia for training, and I see that the way the business is done in Saudi Arabia is entirely different from this region. It's a different part of the world. So because of this, they wanted to start it slow and steady, right? So the first thing is to bring the people in the tax net, make everybody report, and then go ahead with this. So the cost of managing all this is actually 5%, and government is not going to make a lot of money out of it. All right, so we were talking about the VAT accounting. We will, in this brief session, we will see what VAT accounting is, what are the major issues, and how we can understand it well. The third part is the VAT challenges. VAT is a business challenge. For example, if you ask a procurement person, how you are going to get an impact of VAT? Do you think procurement people are capable enough to handle VAT in their line of business? Do they really know what is the impact of VAT that's going to be on them? The answer is they are procurement professionals. They are not tax professionals. So who is going to have the biggest impact in the business organization? Procurement. So procurement people are the most vulnerable for tax. And that's the starting point of discussing the various challenges. The problem is this, that will procurement people be able to get help from the finance professional? The answer is finance professionals themselves don't know much about it. If you ask them, they say we are already struggling for it. So please don't bother us, try to find something for yourself. So again the question is there, who is going to have the biggest impact here? Accounting or finance professional, what do you think? Accounting, finance or procurement professionals? That's a very interesting answer. The biggest impact on businesses today is not on accounting. It's on procurement. It's on supply chain. Why? Because business model is going to change. And business costs are going to change. Your vendors selection process is going to change. Your expense policies are going to change. Tomorrow the procurement professionals will procure. They will do the expense, and when the invoice will go to the accounting, they will return it. They will say, no, this does not qualify for VAT. Why is this so? I'll give you an easy example. The company CEO goes to let's say somewhere and live in a hotel for a day or two. If the invoice of that tax is not in the company's name, but in the CEO's name, company cannot claim an input VAT in it. Why is this so? Because every time you will have to make a correlation between the invoice which you are posting in your accounting system and the tax connection in it. So interestingly, if you ask this question from the accounting people and you say, what about the accounting part? And they give a very interesting answer. They say, we are using Oracle, and Oracle is working on VAT. So one fine day we will get, the moment legislation will come, we will get the accounting system for that. Do you think it's a satisfying answer for this? There is a problem. Oracle is only changing an accounting system. Oracle is not going to tell you when an invoice is in your hand that should you post your invoice in the tax system or in a non-tax system. Because the same expense, if the invoice is made in a different way, will be posted in another way which does not attract VAT. Getting it? So what they are designing is the flow of the transaction. They are not going to provide you any guideline or anything that this is an invoice and post it in the tax side. And there is a great danger behind it. What is that? Except, I believe, God, nobody is going to help you in understanding the system. Why is this so? Government is not interested in your day-to-day accounting. Government is not interested in your invoices. All what government is interested is that they will tell you to deposit a certain amount over periodical period, let's say on a fortnight basis, whatever the tax amount is, go and deposit it in the government account. And on a quarterly basis, submit your returns, right? And for a very long time, nobody will come to see whether you are doing the right accounting or the wrong accounting. And this is the biggest danger in the system. So you are happily keep on doing accounting. Let's say after 1.5 years, one fine day, rather one bad day, a tax auditor enters in your business premises and he says, can I see your accounting record which you have maintained for the tax purpose? And maybe for the first time, finance professional at that point of time will come to know that tax records are maintained separately. Why? Because when the tax auditor will come from the government, he will not look at all of your accounting and finance things. He is only interested in seeing the invoices against which you have claimed an input VAT and the sales invoices against which you have collected an output VAT. And government has made it very interesting. Government has said, okay, you have all rights to make mistake, keep on making mistake, but from our side, for the mistake, the answer is penalty, and penalty is mistake amount times 5. For one dirham wrong tax reporting, the penalty is 5 dirhams. And if you think that the company is going to bear this, company is not going to bear a single penny for it. Why? Because it's a mistake. It's a human mistake. What type of mistake is this? It's a learning mistake. Who didn't learn? The finance professional did not learn. The procurement people didn't learn. Getting it? And what if, unfortunately, the tax auditor came after an year or so? So the company is constantly reporting a figure wrong. For how long? For over a period of 1 year. So they will not take the one figure. They will take the whole amount of VAT wrongly reported times 5. So this is a big challenge. What's the challenge? Learning. So learning is the challenge? The answer is no. The challenge is correct learning. Correct learning means you need to learn exactly what truth is. You need to learn what exactly it should have been. So there is a big challenge in it. I'll show it to you in the slide. So accounting is again a big challenge. Accounting software companies are not going to help you at all. They are just going to give you a software. When you are going to post an invoice, it is you, it is your brain, it is your expertise, it is your knowledge which is going to decide whether you are going to post this transaction or you are going to claim an input VAT against it or you are not going to claim it. Why? Because this does not qualify. So a similar expense, many times it qualifies, many times it does not. And this is the skill of the tax professionals. Another interesting part, after talking to a lot of companies here, except the big companies, small companies are not going to hire tax consultants. And they want their team to learn. And they want their people to learn. So I believe it's a great opportunity for learning. So we were discussing the VAT challenges. We will discuss it in a bit detail. The last part is the VAT implementation. So what is implementation? Implementation means start today. What to do next week, after 3 weeks, 4 weeks. There must be milestones, activities. And by 1st October, where you should have been by 1st January, because 1st October, the tax registration will be there. By 1st January, you will go live. It means your system, people, procurement, expense policies, procurement policies, supply chain, logistics, tax planning, pricing, marketing, everything is aligned with the tax. So can it be done? The answer is yes, of course it can be done. Businesses are doing it, especially the big companies are doing it. How, that we will discuss. So first, what is VAT? VAT is a multi-point sales tax with set of tax paid on purchases. I'll tell you in easy words. If you purchase something, you pay VAT. What we used to call it? Input VAT. Right? Input VAT is what? When you purchase, you pay input VAT. When you sell, you collect from the customer. That's called output VAT. So what is VAT? The whole story of VAT revolves around what you have paid and what you have collected. Pay the difference to the government and report these figures in your tax returns. Right? So that's the easiest part of it. So there are some common principles, some important principles we need to understand. The first is the consumption tax levied on the end user. If you ask businesses today, are you going to pay VAT? They say no. Why would we pay? All our expenses, all input VAT, what we have paid, we will collect it from the customer. Do you think it's a wrong psychology or it's a right one? Are businesses going to pay VAT? No? Okay, that's an interesting phenomenon. Businesses will also pay VAT. Why? Because they are also an end user to a lot of things. There are also a lot of expenses which they cannot transfer to the customer. Why? Because there is a prohibition in the system that you are the ultimate user of it. So what is the standard and benchmark used in it? For example, if you ask a layman and you say, well, I want to know what expenses I cannot transfer to my customer. So there is a simple rule for it. If you cannot correlate an expense to your business activity, if you cannot correlate an activity to your business and you have paid an input VAT, you are going to bear it. If your vendor is not VAT registered, you are not going to transfer or claim an input VAT against it, right? And there are many scenarios like this, that the businesses will not be able to claim an input VAT from the customers and they cannot transfer it. And this is a big challenge. So, will the actual cost of business will increase? The answer is yes. The cost will increase. I'll give an easy example. You want to change your accounting software. It's a bespoke software, you have made it for based on your company requirement. You have asked a technology firm to alter it based on the tax requirement. Let's say the VAT has started. When they will invoice you, they will charge you VAT on that. Can you transfer it to the customer? Who is the end user of this? You. You have purchased a non-current asset. You have purchased a machinery. You have purchased a computer. You have purchased a laptop for your staff. Will you pay VAT? The answer is yes. What will be the name of that VAT? Input VAT. Can you claim it against your output VAT? The answer is no. Why? Because you cannot claim an input VAT against an output VAT if you are purchasing a non-current asset. Getting it? So it means there are a lot of expenses against which you cannot claim an input VAT, and the real cost of business will increase. So what is the easy idea? What is the disguise? The disguise is, don't worry, it's not on you. It's on your customer. No, half of the tax will be on you. Why? Because if you have not aligned yourself with the tax requirement of the government and you have claimed an input VAT, then you will have to pay in aggregate in the form of a penalty and pay 5 times high. And if you have aligned a lot of things, means aligned your business processes according to the VAT requirement, then you will have to bear VAT at a time when you are paying it and you are not going to claim it. And your team and your people know this, that we cannot claim this input VAT. Why? Because it's not allowed. VAT is not an art. It's a pure science. Science in the sense that if you're a finance professional, somebody comes to you and asks, can I claim an input VAT against this invoice? You have to give a very clear and vivid answer. You see the invoice and you say, no, sorry. You cannot do this. Why? Because this is exactly what the skill of an accountant is. And sometimes seeing the same invoice, you will say, yes, you can. Why? Because you know the rationale behind it. Right? So is this rationale? Government is going to tell you? The answer is no. No. Honestly, whatever government is helping and doing some sort of seminars or other things, the moment VAT legislation is there, they will stop doing it. Why? Because they also have big challenges. Why? Because they have to see the whole region. They have to see the whole country. They themselves are in the process of recruiting people. The tax people, the tax advisors, the tax consultants. If you go to the economic ministry website, there are a lot of recruitments going on. Right? So the moment the VAT legislation is there, they will get busy with themselves. Why? Because they themselves have very limited knowledge of VAT. And another big challenge, which I'll discuss because of this. So the first part is the consumption tax levied on end user. Sometimes the end user is your consumer and sometimes the end user is you yourself. And this is the knowledge which you need to know, that I can transfer this input VAT towards my customer. VAT is optional, don't consume, don't pay. Is it possible or no? It's not optional. It's not optional. Why? VAT will be on everything. VAT will be on everything. So if not as a business, as an organization, as an individual, we have to bear it. Getting it directly or indirectly. So what is going to change our lives a little bit? And to what extent, again, I will tell you the friction in it with regard to the GCC VAT, that how it's going to hit us. So VAT is in fact not optional. Around the world, VAT is not encouraged. Why? VAT is a tax on poor, not the rich. And the economies where poor people live, it is not never encouraged from the sense of economics to implement VAT. Why? Because poor become poorer and poorer and poorer. And the corporates and rich people are not paying tax. Why? Because this is not an income tax, it's a consumption tax. And economics says consumption is a function of poor, not the rich. Surprising? No. If you go and read economics, it simply says that consumption is a function of poor. If a person who earns, let's say, 5,000 dirhams in UAE, how much, and his family is here, how much money he spends in a month? 6,000, 7,000, getting it? Whereas a person who earns 50,000 dirham, how much he spends? 30, 35,000 maybe, max if he can spend. So it means he spent only 60-70% of his income, and the real percentage that is applied to his income is less. This is the way how economics see this VAT or sales tax. Only applies when some value is added. It means what? What is value addition? If you talk about value, value means, what is value?
In the process of purchase to sell, there is a value addition of margins.
Very good. I'll ask an easy question. If a wholesaler transfer a good to a retailer, is the value added or no?
Yeah.
Think first and give a justified answer. Just don't give a theoretical answer. Here is a product in a supply chain. I am a wholesaler and I am transferring this product to a retailer. What value I have added in it? No, but is there any value added in the product or no? The answer is yes. Very good.
Make it available. This is the only thing.
Exactly. Make it available. I'll give you another version of this thing. I am a business organization. I am a manufacturer. I don't like my supply chain. Why? Because my supply chain increases my cost. The more hands it will change, the more cost will increase. I will jump into the market and will open a sales outlet, factory outlet. Do we have for this company? The answer is not a very usual phenomena in this market. Why? Because tax was not there. You go to the countries where tax is there, the businesses themselves jump in the market and have factory outlets. Why? They cut down the whole supply chain. Why? Because every time in the supply chain when the product will change hand, the cost will increase, tax will increase. So it means when we talk about the tax planning today, the business organizations are thinking that how much is the tax impact based on their supply chain, because the longer the supply chain they have, the higher the tax they will have to pay. Why? Because the cost is high. So similarly, there are, apart from many other challenges, when we talk about the value addition, when we talk about value, value means, the real definition of value is that anything which the customer is ready to pay you for a product, that's called value. But in tax system, value means the moment number changed. Number means the price changes, VAT will apply. So there is no real concept of value added tax in it. When we say value, the first thing in our mind comes is dollar number. Regardless of the fact whether the actual value has changed or no. If the dollar number has changed, the value has changed. Getting it? The manufacturer gives it to the regional distributor gives it to the wholesaler to retailer. So what's happening? Value is adding, the answer is no. The price is changing. Getting it? So there is a challenge. There is another very interesting challenge which businesses are going to face today here. There are companies here who open their subsidiary companies or associated companies or another new license company. They'll open it like we open files in Windows. Keep on opening, keep on opening. Getting? And there is a big challenge. Why? Because around the world there is the concept of group companies. Inter-group transaction or intra-group transaction. The accounting treatment is different. And usually companies enter and register with the same tax number. It means they can successfully avoid a VAT within the companies. I'll give you an easy example. You are an automotive company. You are making a vehicle, manufacturing a vehicle. You have to buy tires. If you own the tire company, if you have the controlling interest in the tire company, it means it's a part of your group company. You are not going to pay any VAT when you will transfer it within the organization. Why? Because it's a part of the organization. Because the tire company will have the same VAT number, the group VAT number, that is going to be applied to the other companies in the group. But what's the requirement? The controlling interest. The companies need to have a controlling interest over it. Alternatively, another automotive company, if they are going to buy it from outside, of course it's a transaction, it's a sales transaction. Getting it? So these are the challenges. This is the tax planning which companies are doing today, and they are going to see, because around the world companies, sometimes you might have seen there are horizontal and vertical integrations. Why do companies enter in it, especially in the countries like UK? Because there is a very high VAT rate, 15%, 17.5%. So what do? They sometimes go for an integration. They say take over the company so that we can save a lot of money. So value addition is again a whole debate, a whole day debate when you talk about that. What is value addition? How value addition is going to change the tax system and the tax paradigm of the company, and how companies can reduce it using the tax planning. Getting it? This is the skill you need to know. Another important thing, do not think that this is not a part of my job or a part of learning which I want. Because every time when we start learning, we get some pressure at our heart and we say, well, this is not what I'm looking for. Getting it? So these are the things which you have to really learn. Because sooner or later in your workplace or in your career, or maybe an year or two, you are going to use these things. And this is the hardcore skill which you can use in your career. So value addition challenges for businesses are very important today. Applied when goods are supplied, not consumed. I'll ask a question, I will not answer it, I'll just give you a food for thought. If I buy a product on cash, and if I buy it on credit, will I pay the VAT at the same time? No. For example, I'll give you make the scenario easy. I buy a product on cash, I pay cash today, and I took the goods. In the second scenario, I took the goods, but I have bought it over a period of 90 days. I will pay after 90 days. So it's a credit transaction, I'll pay after 90 days. So when will I pay tax to the government? The question is, immediately. In the credit transaction, is government going to wait when I'll make the payment, then I'll deposit the tax?
No. The supplier has to declare.
So that's again a big question. Getting it? And there are many questions in it. Yes. Okay, we'll talk about it. It's too much to talk about it. So maybe a specific question related to your business, we'll talk about it. We'll have an question answer session, so we'll go for it. So the question is, the treatment is different. The cash and credit treatments are different. And this is what we need to learn in this session. So the question is, when VAT will apply? When it will be supplied. It means what? When it will change hands. When it will change hands. And the process is very simple. I'll give you a food for thought. Why? You go to the Economic Ministry website. They have written the answer of this. So there are some answers which are available there. So you can see that how this accounting transaction will be done and when the VAT will be paid. Okay, VAT usually hits poor than rich. VAT is a consumer issue, not a burden on businesses. We have already discussed. This is not the case. The case is different. VAT good for businesses? Yes or no? VAT good for accountants? No. A lot of people, I can say a lot of people say no. It's not good for accounting as well. Not good for accountants as well. Not good for procurement. Procurement people hate VAT. Why? Because they are going to be a part of it. What my idea is, as an accountant, and if you are a quick learner, and if you are a real learner, I believe the moment you come to know that VAT is going to be implemented, you should have a party for it. Why? Because this is the game-changing time. And this is the time to to gain power. So VAT is good for businesses? The answer is yes. Why? For a long time, businesses do not revise their business models. But now they will. Why? The real strength of the VAT system lies in the hand of consultants around the world. Consultants are the people who change the game. Why? Because there are, in this region, I'll give you easy answer for it. This country is not a manufacturing country. It's not an industrial estate. There is no industrial estate. This country is an importer of most of the products, starting from the basic food items to engineering and to blah, blah, blah. Whatever you say, imports are there. The best time to save money for VAT is when the goods are being imported using the transfer pricing system. Why? Transfer pricing is an interesting, learned way of tax planning. Right? So consultants, what do they do for companies? They manipulate the prices, they manipulate the cost. There are two things. One is called tax evasion, right? And the other one is tax mitigation. So what consultants and accountants do, they do the tax mitigation part. Why? Because tax evasion is a crime. They don't do this. But there is a very interesting science how the tax cost can be reduced using the import system. And especially when the goods are being imported in a specific area. So VAT is good for businesses? The answer is yes. Why? Because a lot of businesses will make money out of it. They will increase their market share. A lot of businesses will lose their market share. Why? Because they are not good tax planners. And the game will revolve around that how the cost is going to be managed. Why? There is a very interesting situation. The first 2 quarters of 2018 are expected to be a disaster for businesses. Why? Because if you have to buy anything related to tax, when you will buy it? On 31st December 2017 or on Jan 1 2018?
31st December.
Of course, a lot of people will buy in 2017. And from 2018, if you don't have, you have a mindset that VAT is on everything. I have to pay VAT. So, is your cost of living going to increase? The answer is yes. Of course, it's going to increase. So, all the expenses or major expenses people will do in 2017. And the first 2 quarters of 2018 are going to be the real business challenge for companies. Why? Because consumers will not buy a lot of products. Great. But the question is, will the infrastructure be there? The answer is yes. Will the team be there? I'm not going to answer this. So the question is, do the businesses have the same team in 2017? Will it be there for 2018? The answer is no. Why? Because organizations will have to redesign their business processes and they will have to cut down their cost to an extent. Why? Because this is a part of tax planning. Because this is a part of entering the tax regime. Today, big businesses, they are calculating that how much expectation is there that their sales will be down in the first 2 quarters, and how they are and what they are going to do for it. Again, so the first 2 quarters are really challenging for the businesses. Similarly, there is expected a business boom in the last quarter of 2017. Why? People will buy like anything. People come in this region of the world to buy the electronic items. So there will be a boom in that period, and after that, two quarters are expected to be, and government has recognized this. They have acknowledged this fact, and they say that companies need to plan for this. This is again a part of planning, and companies will do it maybe in the last quarter of 2017. So what is good for businesses is that they need to rethink about their business models. I will talk about the GCC framework. Can anyone answer that why framework is not there? Why is it not announced yet? Why GCC framework is not made public? Sorry? For different states, for different countries. Okay. There is an important problem. The problem is the consensus. Why? It is GCC VAT. But what is the problem? The problem is that the economic and commercial situation and business situation of all 6 member states is radically different from each other. I don't know how much you travel in this stage, but if you go to Saudi Arabia, it's an absolutely different economy. It's how it is different. I have heard, I'm not sure, government is planning to have a VAT on rentals as well. Have you heard about it? So you haven't heard about it. The government is planning. They have not finalized it unless the legislation is there. Rentals means what? Your house rent. You're going to increase a 5% house rent. Then on one of the sessions, somebody asked the government and they said, oh, we are thinking about the commercial part of it, only commercial rentals. Again, the business cost will increase. Why is this happening? Because of the demography, because of the demographic situation. Why? 90% of the people in Saudi Arabia, they do not have their own houses. They live in rental places. Because they don't get anything from the government. The government does not give them any house. There is a lot of poverty in Saudi Arabia. So if you are talking about a VAT on rental, it's going to kill them. It's going to kill people. Why? Because government has recently brought their 40% of their salaries down of the government employees. Do you know this?
Yeah.
And just months before they abruptly brought it back. So people have a different mindset right now. They're not making a lot of money there. The unemployment is there in that particular economy. You go to Oman, people are driving taxi. Every Omani has one taxi. If you go to Saudi Arabia, you come out from the airport, Saudis will be after you, come to my taxi, come to my taxi. Why? Because Saudis are driving taxis. Why is this so? Because they have different economic scenarios. And this is the reason why the consensus is not there. There are a lot of countries, out of this GCC, at least two, who are rarely interested in it. They say the last thing they are interested in VAT. Kuwait and Qatar, they have no interest. They are very small economies and they are not interested in it. Getting it? Because of which there is a problem. What is the problem? That GCC VAT is stopped. Why? Because it is a common framework applicable to all 6 member states. But when it was being brought, this thing was never thought. What? That the economic scenarios are different. That their visions are different. If you see, have you heard about 2030, Vision 2030?
Yes.
Saudi Arabia, UAE vision is 2021. Bahrain's vision is 2030. So they are more focused on their vision rather than implementing the tax. Why? Because tax is a game changer for them in their economy. Because of this, the application consensus is getting difficult. It's getting difficult for them to get their consensus. Why? Because if the consensus is not there, then it is not a GCC framework. So initially they decided that the local legislation will be different, will be separate, but at the end of the day, it should not contradict with each other. Getting it? Because of this reason, the framework is not there. And it's taking time. They need some time. Till what? October is coming, and from 1st October, companies need to get registered. Do you think VAT is coming or no? Maybe yes or maybe no.
It's coming.
VAT is a reality. If somebody thinks that VAT is not coming, it's wrong. VAT is coming. And one fine day you will get up in the morning, the PDF will be on the Ministry of Economic website, and you will come to know, oh my God, the legislation is there. Great. But still, do you know, if the let's say tomorrow morning legislation is there, so what's next? The question, you were waiting for 1.5 years, but were you supposed to wait? And what you are going to do tomorrow, if the VAT legislation is there? You will immediately make a printouts of it, find it, make it in a cover, will try to read it, and after every 5 pages, your head will start spinning. Why? Because it's a legislation. And legislations are ambiguous. They are written in vague terms. Right? What is the challenge in legislation? Let me show you. The moment legislation will come, there will be a learning curve. What is a learning curve? Legislation is in front of you. If you think that legislation is written in simple, easy words, what to do, what expenses not to take, how to do the procurement, no. Just go to the website of UK and find out the VAT legislation there. You will hardly understand one page. Take out any legislation. Why? Because this is vague. So the real question will start when the implementation part will come. And there is a problem. Companies are well equipped in it to an extent. Why? Because consultant and tax people are there. If you ask them, they will tell, do these things according to this legislation. And this is the challenge. This is again a challenge. They will tell these things are taxable and not taxable and do accounting and blah, blah, blah. They'll tell the whole story. But there is another player in the learning curve. Who is that player? The economic ministry. Whatever you believe, you think, or what is in your opinion is of no use. The only opinion is what economic ministry thinks. And for a good deal of time, they are not going to tell you what they think. Why? Because they are also new in this business, like you. It means what? It means the tax consultant will tell you a lot of things. They will do it. And with the passage of time, you will come to know, when the government guy will come and he will say, what are you doing? Why are you doing this? We don't think like this. And there is no consensus, there won't be any consensus on the part of consultants, the government guys. One government guy thinks north, the other thinks west. Number one. Number two, those companies which are in all 6 countries, their local legislation are different and their local people thinking are different. So it means the uniformity will not be there. Whatever is the rule in this market may not be the rule in Saudi Arabia. Why? Because this is exactly depending on where the Saudis see the moon. But they're getting it. Their rules are dependent on the sighting of moon. So on which side they are seeing, it's their rule. So the companies, big companies, let's say Al Marai and other these companies, they will be in deep trouble. Why? Because in Saudi, their local tax legislation and local tax application may differ from those in UAE. And this is exactly what companies are worrying today. And this is why companies are crying today to say, at least let us see the legislation. The legislation is already passed, at least in UAE and Saudi Arabia. UAE has not made it public as yet. Saudis has made it public to an extent, but still it's in Arabic. Another big challenge is that the law, when it will come, it will be in Arabic. So don't get happy that I'll download the PDF. If you download the PDF, download a Google Translator as well. So keep it in your front of your mobile and then read it. Getting it? So Arabic translation is very difficult. Getting it? So fortunately, if you got it in English as well, it's a blessing. But still, the problem is that of interpretation. So in the learning curve, there will be 2 players. Clearly 2 players. You as a business and the tax implementation team, the government. By all means, you will follow the government. You have to follow their footsteps. You cannot go ahead. Excessive learning and less learning will both backfire to you. Will both create problem for you. If you are too smart, it will backfire. Why? Because those who has to evaluate you, it is an examination for you for some time. What is VAT? VAT is an examination for next 1-2 years. Why? Because somebody will come and they will say, Wallah Habibi, this is all wrong what you have done. And the moment your company will come to know that you have done all wrong, you can understand what's going to happen next. Getting it? That's a problem. So in the learning curve, who will be the front runner? Government. So people will follow the footsteps of government and they will learn what government is thinking. And there is very interesting third player in the learning curve as well. Can you guess which one? Who is that? The third player in the learning curve? No. Very good. Tax tribunals. Tax courts. Why? Tax auditor came, he said, you are wrong. And when you calculated it, you say, time to contact tax lawyers. Why? A lot of companies, because tax tribunals will have 2 uses, I'll tell you why. The first thing is somebody will get penalized. Anyway, he will go to the tax tribunal. The problem is that the people who are sitting as the tax judges, they don't have any experience of tax. And they are the third player in the market. Even in the developed economies, developed places where the taxes is for decades, still we read the tax cases. Why? Because when you go to the tribunal, the first thing you say, you know how the cases are fought in the court. There are no arguments, no story, no crying and shouting. The lawyer says, my lord, so-and-so versus so-and-so, 1963, so-and-so versus so-and-so, 1978, 92, 2004 and 2007. Just go to your chamber and see and read them and then come back. And what the judge is doing is keep on noting these things. This is exactly how the tax tribunals work. So here, when the judge will go, or the lawyer will go, what he will say? I wonder what he will say. He'll say, my lord, in UK, 1973, and the judge is not going to accept it. Why? Because there are no tax case studies here. The whole legal business revolves around case studies. Are you getting it? So it means we will have a third player in the law, and which is the tax tribunals. Interestingly, the tax tribunal cannot ask the government. Why? Government is a party in it. The moment the government has asked for definition from the economic ministry, it's a mistrial. Why? Because court is asking from a party that why the government has already explained it. So what's the sense of asking them again? So what's the problem? So that will be a very interesting learning curve. And that businesses will have to face for how long? Over a period of time. Then we keep on facing it, and then we keep on handling it. So this is exactly what's going to happen in the next 1 and 2 years. So what's interesting? All those who are connected with the tax system, they will learn fast. How? The tax case studies will be there. And the best way of learning is learn the case studies, what happened around the world in different things. So this again a part of learning, but the secondary part of learning. First, understand the tax. Those who want to have a career in VAT, because this is a career work. Because we will have tax professionals and tax consultants, the money makers in the market. They will understand this idea, they will implement it. All right. If you have any question, please feel free to ask. Or we go ahead. Now we are going to talk about a few terminologies that you will hear. The first one is the input VAT. You buy something, you pay VAT, called input VAT. Output VAT, you sell something. You collect VAT from the customer, that's called output VAT. Standard rated VAT are all those goods on which VAT will be applied at the rate of 5%. What are those goods? When the tax legislation will come, there will be an annexed schedule in which all those things will be mentioned which are exempt. And the last line says the rest all include standard rated tax. So what do they show? They only show two things. The legislation shows two things, the zero rated and the exempt supplies. Rest are all taxable at the rate of standard rate. Zero rated products and exempt supplies are usually confusing. In exempt supplies, I'll try to make your life easy. I'll not go in details and simple words. All those who sell exempt supplies, they are not supposed to get registered with the tax authorities. Right? Exempt supplies people don't register. Why? They don't report. Why? Because they cannot charge any output VAT to their customers. And whatever input VAT they have paid to date, it's a part of their cost. Getting it? So the worst nightmare is for the companies who are zero rated. Who are exempt supplies. Who are exempt supplies. It's a nightmare for them. Why? Because all VAT will be a part of their cost. Exempt supplies, all pay VAT they have paid is a part of their cost. So, those who think that this has happened something wrong, that education and healthcare has come in zero rated, they are wrong. It's a blessing for them. Why? Because all the VAT which healthcare and education will pay, they will claim it back from the government. Why government did it? Because education is one of the most costliest part in this region. People have only two costs here. You know, I don't need to tell you. And interestingly, nothing left, so you cannot spend anything. So they made it zero rated. And education, they reimburse the money. So what is the difference between exempt supplies and zero rated? Exempt supplies do not apply for tax registration. They are out of the tax net unless they sell any other product which is taxable at zero rate or at standard rate. The other part is that in zero rated products, even if you apply a zero rate to your customers, for example, you have a basic healthcare. Again, we need to be very clear here. Government says basic healthcare. It means all those fancy type of healthcare like hair transplantation, skin treatment, they are not basic healthcare. And they are standard rated expenses. Getting it? Yes. Okay, I'll talk about it. Yes, please.
Sorry, I'm going to jump in with, I think, a very basic question.
Yeah.
So we know it's VAT on goods, actual products. How about services as opposed to actual goods? Are services just naturally exempt from that? For example, you do consulting services, you do events management, it's not a physical product, it's a service. How does that work?
I think the guidelines are very clear in it. Services are taxable. What type of services? All type of services are taxable. So has government announced any exemption in any service? The answer is no. Getting it? It means if you are a consulting company, a training company, or any type of company, tomorrow when you will send an invoice to your customer, you will charge 5% VAT on that. Getting it? And you can claim an input VAT against service for what you have paid for against your output VAT for the product which you are selling. So if you have incurred, let's say you have done a marketing expense or some other expense or a consulting expense that have a direct correlation with the product which you sell, you can claim an input VAT against it, against the output VAT which you have sold the product to the customer. So in easy words, if you sell goods, buy from somewhere service, you can set it off. There is no problem in that. Hope you get the answer. All right. In some countries, there is a very interesting situation. I'm just telling you the answer for this service. In some countries, they say input VAT can only be claimed against an output service VAT. So in some countries, the law is like this. They say goods against goods, service against service. Okay? And it's a very difficult situation for the businesses then. But I don't think so this is going to happen here. So I hope zero rated and exempt supplies is clear to you. Exempt supplies, no registration, no input VAT claim, no charge to the customer. You cannot collect any VAT from the customer. Exempt supplies, charge your customer at the rate of 0%. It means when you will send an invoice to your customer and it's a zero rated product, will you charge VAT? The answer is yes. At what rate? 0%. Why you are doing this? Because you have to report this transaction to the government. Government want to know this transaction. And that is the primary difference between exempt supplies and zero rated. Right? So we have some standard rated supplies in front of us. Consumer goods and services. Sure. We can take a 15-minute break. Then we'll be back. We will reassemble and then we will do some questions. For 10 more minutes. Okay. Alright, so we have some common standard rated products. Your attention please. Consumer goods and services, yes. Imported goods and services. The answer is no. Is there a VAT on import? The answer is no. The answer is no. There is no VAT on imports. There are two things that need to be discussed in detail. Import are not going to attract VAT, and free zones are exempt from VAT. Why? Because they don't fall in Dubai land and they have their own regulations. So those who think that it's a good news for them, they are wrong. You cannot do business with any company in any state unless you are tax registered. Getting it? If a free zone company is going to, I'll tell you an interesting fact. You are going to buy, let's say, some papers, A4 rim. Of course, you cannot buy it within Jebel Ali, can you? No. You'll have to come out from the boundary, and you will have to buy it from Carrefour or maybe Lulu or somewhere. Are they going to charge VAT on that? The answer is yes. Are you going to claim an input VAT? The answer is no. So if all those who think that it's a blessing for them, they are wrong. It's a curse. All invoices that will come to you, all procurement that free zones will do, that will attract VAT. Will they be able to claim it? The answer is no. Yeah. Please.
Again, I'm based in a free zone.
Yeah.
So I understand my cost will go higher all the things I buy paper.
Of course, the competitiveness.
But now when it comes to me charging my customers, for example, say LG, I charge them consulting services or funds management services, can I impose a VAT on them or no because I'm in a free zone?
It's a very interesting question. It's a very interesting question. What I believe is because the government is thinking about it, I believe the government will give an option to free zone companies to get registered. Why? Otherwise, there will be two different business communities. Dubai land and free zones. But free zones, mostly even for buying a pen, they have to come to Dubai land. Their procurement, their business, expenses, employees, is everything they deal with Dubai land. Do people live in free zones? Very rarely people live in free zones. The employees live in Dubai land. So if you want to pay, let's say, some expense on their expense which you are allowing them, you cannot. I'll give you an example. You give them petrol facility to your employees. They'll put petrol, tax will be there. They paid the tax. Right? A company within Dubai land will be able to claim an input VAT against it. A company in free zone will be at a complete loss. And the first thing he will start thinking about is moving from free zone to Dubai land. So this is not going to happen. This is not going to happen. Government is going to make a provision against in this thing. Government is thinking about it because that will cut the whole economic system into two parts. And people will start opening shops and businesses and other things. So it means free zone companies can do business with only free zone companies. And that's a wrong phenomenon. That's not going to happen. Getting it? So two things which are very interesting and very important is that free zone companies are not subject to tax to date. Till the legislation is not announced, but I am pretty sure that there will be a provision for it in the days to come. If not, then it will be a very difficult situation for the free zones. Neither they can. Yeah, that's right. That problem will be there. But I'm pretty sure this is not going to happen. The other thing is that there won't be any tax on import. But the moment you will take out the goods from Jebel Ali, custom is there. Yes, recently the custom duties are being imposed. Again, the moment you will come out to the Dubai land, you will have to pay VAT on that. For example, if you have imported in Jebel Ali, if you have re-exported it, it's good. If you have brought it to mainland, it will be taxable. So the interesting part is that all those goods, most of the goods in UAE are imported. Especially the consumer items, the consumer goods, packed items, they all come from different regions. They are not taxable as far as imports are concerned. But the moment they will be brought to the main market, because the mainland is the main market, they will become taxable. And the real advantage of not having an import, duties, VAT on import will vanish. Why? Because you cannot sell anything in free zone, can you? I haven't seen a lot of markets there. There aren't a lot of markets. So all the business centers, consumption centers are all in the Dubai land. So what we are waiting for as from the end of the free zone companies, because free zone companies, when you tell them anywhere that you are exempt from tax, they say yay, and then when you say but you cannot claim an input VAT and you will have to pay, they say oh my god, so we didn't know this. So this is the problem they are going to have, but hope there will be a solution for it very soon. And the law cannot come in this way because it will create a great anomaly in the system. Product and services we have seen. So imported goods, why I have written here is because the imported goods up to the point of import, no. The moment you will bring it to the market, yes, the VAT will be there. The moment it will change hand from importer to distributor or to retailer, retailer will have to pay VAT on that. And the amount will have to be deposited in the government account. Yes? No, not taking it out from the free zone. When you will supply it to somebody, because you cannot sell it in free zone, can you? How much of your business you can sell? How much of your import you can sell? Nothing. So you'll have to bring it to the market. The moment you will bring it into the market, there will be VAT. Because the person who will purchase from you in Dubai land, he will be VAT registered, and you will have to charge VAT from that person. That person will have to submit deposit VAT with the government. Getting it?
As a manufacturer, if I import raw material,
yes.
so when I'm taking it from the general input, I don't have to pay anything for that raw material. When I convert raw material into the finished good,
Exactly. Exactly. You are adding value. The moment you add value, exactly. I just want to clear this concept. It's not that when you have taken out from the boundaries the big double LE gate number 7 or gate number 4, and you say, okay, now they take out VAT. He's not going to do it. You have a factory in Ras Al Khaimah, no problem, take it to Ras Al Khaimah. It's your own product, manufacture it. But when you will issue an invoice against that product, getting it? So Ras Al Khaimah does not fall in that. Fall in the sense means if you're in the mainland of UAE, of course you will have to get registered and you will have to pay and collect VAT from that. Right? Any further question? Yes.
What if, as an LLC company, I import something into Dubai?
Yeah.
So I am an importer, and then I retail it directly. When I import, I attract a 5% custom duty.
Okay.
Is that also my input VAT?
No. Your custom duty is different from VAT.
Okay.
And when you will hand it over and you will sell it to the consumer, to the retailer, and when you will...
I am the retailer as well. I import and I retail. Then what happens?
Then you will have to collect VAT from the customer.
Okay.
Because in your supply chain, you are the importer and you are the retailer. I just told you what companies will do. They will jump into the market with a factory outlet. So basically, somewhat you are an example of a factory outlet. You will import the goods, you will sell it yourself to the customer, and you will have to charge the output VAT from the customer, and you will have to deposit it.
And where's my input VAT? Nothing?
You didn't pay the input VAT, you paid the excise duty. You paid the excise duty on import, because the imports are not taxable. Okay. The buyer will have to pay. The simple rule is that, let's say your product is 1,000 dirham. You have paid an excise duty of 100 dirham on it. No, you have paid it. You have imported it. So when you will sell it to the customer, you will apply 5% VAT on 1,100. Plus your profit, if the sales price is higher than your cost. Of course, which will be. Yes, everything will be included in the cost plus your profit, and your invoice will attract 5% VAT. So excise and custom duties and VAT are different, and VAT applies on post custom duty figure. Why? They have recently introduced it. Excise duties are there. Both the things are going side by side. Excise duties and taxes and VAT. Yeah. But they are not applying VAT on imports, so why would they do this? No, but it doesn't make sense actually. You know, if they are applying VAT on imports, then it makes sense. But they are not applying VAT on imports. The VAT will only be applied when you will sell it in the market, or you will transfer it to a wholesaler or to a retailer, right? So we will keep on talking about it. Meanwhile, we'll take a break. I believe you could just wait for a minute.
Thank you, Mr. Abi. There is a small announcement to be made.
Thank you. There is one thing very interesting I would like to tell you about this workshop. I would be the last person who will be trying to sell it to you. But just let me tell you what exactly this workshop is all about. In this training, especially in this workshop, the first and the most important part is the impact analysis. You will hear this many times, impact analysis need to be done. The training starts with an idea that how an impact analysis can be done. Getting it? So the essence of this training is 4 areas and 4 activities. And activities will be longer one. For example, in the impact analysis, you will get the real life data of a company, and you will be the consultant or you will be the employee of the company. That will tell you step by step what to do. So in most of the training, what we see is people tell you do this, do that, but they don't tell you how to do it. So this workshop will be very helpful in the sense that tomorrow when you will go back to your company, you will have a whole plan in front of you that you will be able to start. It means that will be the starting point of it. What to do and how to do will be the entire part of this training. So in this training, you will be mostly busy in doing things. The first part is the impact analysis. That's a in-depth exercise. What is the exercise? I'll tell you. In order to do the impact analysis, you need data. What type of data you need? Why? Because there is a lot of data in your company. You need your own company data. This workshop will tell you that exactly what data you need, how to convert this data into information, and how this information, and you can see the impact of VAT on this information. What data you don't need, it means you don't need to waste your time in that, in those information which is not related to VAT. So the training starts with an exercise. You will get a whole bunch of data and a lot of information that will be in front of you. And we will say, okay, now it's time to start the impact analysis. It will be a group exercise. And the team will do the impact analysis and step by step, that the first step, classify the data, take the data out, ask from where you can get the data, how many ways you can classify it, how the data can be presented so that you can see the real dollar numbers of the impact of VAT on your companies. Similarly, it will go step by step. The second part, we will go and we will say, here is the procurement situation for your company, because you know the whole world revolves around numbers, data analytics. So we will bring the imaginary data or a company's data in front of you and we'll say, this is the vendor situation right now, this is your procurement and expense policy, classify it, see how it can be done. So different groups will classify it in their own way, then you will get the standard answer and situation that this is the way how it could be classified in the best way. And then we will go deep down in the procurement policy, in the procurement side, that what should have been done, and we will see different scenarios. And we'll see that if this is the procurement, then the tax impact is in this by dollar numbers. So how can it be made better? That's a part of tax planning that we will see, and we will see that it can be done better by using these tax planning techniques. So by the end of, you will come up with a least tax numbers. Similarly, your expense policies, what expense policies need to be redesigned. So the interesting part is that in this training, like you are going to bear me here for 3 hours, in the 2-day training, my total time to speak is less than 3 hours. And most of the time, you are busy in doing things. So that's the first part of the impact analysis. The second part is the accounting part. In accounting part, the exercise is very interesting. The day one, on your table, you get a board. Because accounting is in the form of a board game. You get a number of invoices that spread around you and you have to record these invoices. In your board, and it will start with the invoices, segregating them, because every invoice has a catch. Catch means there is something wrong in it. You need to find it out. So one by one, you see the invoices, the team see the invoices, they classify some of the invoices and they say we don't want to record it. and they come up with the numbers, they start recording it. There are some returns, in the sense the sales returns, purchase returns are there, bad debts are there. Some of the sales are done on credit and cash, and the whole accounting system that is done in the form of a board game that is in front of you. And finally, you will end up with a periodical deposit of your money, because I believe fortnightly the cash deposit will be there, and you will end up with the first quarterly return. So you will understand the whole flow of transaction, type of transaction, and what are the different catch in it, and what type of transactions you need to record and you don't need to record. The third part is the business challenges. So you will get various type of business challenges as a group, and the group will find out the situation and they'll say, okay, well, this is a challenge, and they need to find out a mitigation strategy, because there will be roadblocks, there will be a situation, because this is the usual business problems for VAT. So they will come to know, okay, this is the situation, what to do. They will come up with their situation, and then they will get the ideal situation and the solution of this. So this training will keep you on your toes for the next 2 days. And most of the things will be based on your learning by doing it. Instead of just by listening to me and by listening to the story part, you will be doing it, and that will give you a first-hand knowledge and understanding that how to start the impact analysis, how to collect the data, how to convert it into information and to present it to your management, that this is our business situation right now, how to understand the accounting part of it, then how to implement it. The fourth part is the project side, that how to implement it. For example, I personally prefer that VAT should be implemented in the form of a project. Why? Because projects are very well managed, time bound, within cost and objective activities. So the activity starts with writing the scope of the project. Who will be the part of the project team? What expertise you are looking for? In a scope activities, what is the part of the scope of the project and what is not? A scope need to be broken down into work breakdown structure. Work breakdown structure need cost. Getting it? So all the activities are time bound and the way how they are supposed to be done. I'll just show you in a nutshell that that what may actually be the output of it. If you can see your last page of your presentation, can you check it out? This is actually the roadmap. And this is exactly how we'll do the training. So if you see on the left hand side, we have an impact analysis. And we will see 3 different areas. One is the accounting part, the flow of the transaction, their classification, reporting structure and compliance requirement. The second part is the impact on procurement, supply chain, vendor management and contract administration. Contract administration is again a very important part of it, because businesses will have to redesign their business contract. And the training will get a sample contract and you will have to find it out, is it good or bad, and what changes you are supposed to make it. Then the third part is the cost impact on the business, the capacity building, the process redesigns and the market share and pricing. So these are all the areas of impact analysis that we will attract in the impact analysis part. The second is the transition planning. So we will see that who are the stakeholders and we'll do the stakeholder analysis in it. That how stakeholders are going to get an impact, how we are going to do their management, and how we are going to bring them on board and going to communicate it with them. The next part is the VAT steering committee, the VAT project manager selection. That's the second part. If you see on the left hand side, the third part is the transitional challenges. Transitional challenges means starting from today till Jan 2018 when it's going to be implemented. For example, the VAT framework. When the framework will come, local legislation will be a big challenge, which I briefly discussed with you. Understanding will be a problem, because understanding does not mean you take it out, start reading it, and by the end of the day you will, I got it. Because law is about implementation. So you need to understand, and especially in the training on the legislation part, you will get some terms and in the form of cards, you will say, okay, if this is the term, what may be the implementation impact of this? And this activity will help you understand a specific type of thing, which is based on the global best practices being used around the world. So legislation and that framework will be a challenge. Human resource is a challenge. If you see there is a word capacity building. What is capacity building? You know, one of the biggest problems is that when the consultant works with the company, they do not keep the team on board. Why? Because if the team has learned everything, consultants will not be required. What is the biggest thirst of the organization today? Is develop their human resource, develop their processes. Even if the VAT is being implemented, the team must be on board. Team exactly know what consultant did. The processes need to be written in the form of manuals so that anyone who is a part of the organization today, tomorrow when he leaves, there should not be any vacuum in it. Why? The new person comes, he look at the manual, must be written in very easy and simple words, and he understands that how the organization is operating. It's a part of capacity building. So this is again a big requirement, not only developing the human resource, but developing the processes as well, writing them down and in the form of manuals and making clear instructions to the employees, sharing the knowledge with the employees, whether they are a part of it or not. Why? Because it's a learning curve and it will take attention for some time. Then the third part is the IT. Those companies will be in deep trouble who are going to alter their software themselves. Those who are using the Oracle and other big softwares, a SAP or something, they'll be good. Why? Because the changes are going to be made by these vendors. So IT, if the alteration is required, then IT people don't know anything. They will ask the finance people, and finance people, interestingly, to date, knows nothing about it. The fourth part is the procurement part. The challenges are the policy revisit, deciding the vendor policy, expense policy, cash and credit policy, import of things. So there are a lot of things which affect this procurement part. VAT registration is again a big challenge. I'll tell you why. I recently visited a client. Interestingly, the activities which the client is doing is not written in his license. They have taken a license, and the actual activity they are doing it as a part of a foreign entity. Why? Because that is the cheapest license, a branch of foreign entity. So they are doing their all accounting in their another company account, and the original business what they are having, they don't have the practical license for it. License in the sense that that their prime and core business is a branch of foreign entity. Getting it? And it's a very difficult situation for them. Why? Because of course they are a branch of a foreign entity, but the foreign entity, if they have taken a license of it, the license of their core business, that business will have to be reported in the country of origin as an income there. Otherwise it will be a tax evasion there. Getting it? So there are so much complications inside, because today businesses do not focus the tax part of it. They only focus the business model, that how it can be cheaper to them, and the PROs and the company registration businesses which are helping them out, they are not going to help them out in the tax purpose. So there is a very complex situation, and it's very usual. Interestingly, when I asked the CFO, I said, what is your nature of your business? He says, honestly, I haven't seen my licenses yet. So we brought the license, and interestingly, in the license, the business what they're doing is not written. Again, the question is how you are going to get registered. Why? Because when you will register on 1st October, you will have to write down all type of businesses what you are doing, all type of revenues which you are generating. If the tax auditor caught any revenue generated from an activity not reported in your tax registration, it's a crime. It's a crime. Getting it? And it may go to up till imprisonment or anything. Why? Because it's not about fine. It's about tax evasion, and tax evasion is crime all over the world. Right? So this is the starting point of it. Companies have never thought about it. So we will see at the time of VAT registration what are the various challenges companies are going to face. So you can go back and you can see in your company whether you are going to face this challenge or no. Or are all these points, let's say you get a checklist and you say, well, out of my 10 points, at least we comply with the 8. And you can tell your company that 2 points we are not complying. We have to see that what may be the solution of it. Getting it? So legal challenges at the time of registration will be there. I'll show you the whole form. And that's based on the British system, which is exactly going to be followed, I believe, here. That what exactly information they are looking for from your side. So you have to see whether you comply with it or not. So procurement is again going to be a big challenge. Strategic procurement policies and revised pricing. Why? Tomorrow what will happen? When you are going to implement VAT, implementation cost will be there. Who's going to bear this implementation cost? You will pass it on to the customer?
No.
The government has already said this. They are monitoring for the sake of fine, any amount apart from VAT transferred to the customer, government will take a strict action against the company. Getting it? So VAT implementation cost is not the customer's cost. I'll tell you a very interesting situation, just for the impact analysis. I'll give you an example first. For example, you're going to start a business of manufacturing. You have invested $10 million in a business, manufactured something, put it in the market, throw it in the market, kept it at different chain of stores. So that 10 million is there. Your monthly sale is, let's say, $1 million. Right? By the end of the month, $1 million goods are sold. So you need to put $1 more million in the business. Getting it? Why? Because when your shelves will get empty, in order to fill them, you will have to put $1 more million in it. And ideally, you are not going to get this money by the end of the month. I'll give you an example. Carrefour. They have huge inventory in their stores. So they must have a huge investment in it as well. The answer is, they have zero investment in it. Why? What they sell shelves only. That's $1,000 per shelf per month. And mostly they pay the vendors after 60 to 90 days after the sale. So any big mall, when you go, the sign of Majid Al Futan is there. Why? Because they have heaps of cash. They have mountains of cash. They are selling people's products, holding the cash, investing it. Why? Because their cycles are long. So practically you are not going to get this money overnight. So practically what happened, that business which started with $10 million, first month 1 million sale is done. Now you got a call from the superstore and they say bring 1 million products more. So you invested 1 more million until you get 1 million back. Getting it? I have a specific question here. When you are going to get your 10 million back? Let's say your profit is 5% on your sales. 1 million times 5% is $50,000. When you are going to get your 10 million back? The answer is never. That's called the fixed working capital in the business. Businessmen are millionaires, but if you ask them 100 dirham, they'll say all my money is in the market. They are unable to pay. Why? Because their products is in the market. All their money is in the form of the shelf filled. Getting it? Why I give this example? The moment on Jan 1, any product you will buy, you will have to deposit 5% of it with the government. Getting it? It means after 1st Jan, when the sales cycle will start and purchasing cycles will start, X amount of procurement you have done, the 5% of VAT will be held with the government. Getting it? And it will be, you will be keep on doing it unless you recover from the customer. Getting it? So when the tax payment comes, government does not accept anything except cash. You deposit it. But when it comes to the refund, they say talk about set-offs. Getting it? If you have a refund towards the government says wait. Till you collect the output VAT from somebody and set it off against that input VAT. So refunds are practically not there. So what is the challenge here? That let's say over a period of 3 months, based on your procurement, your procurement $1,000 or $1 million times 5% will be stuck with the government. Getting it? And every day, of course, you will have to pay VAT. Your cost is increasing. For the time being, your cost is increasing. What is increasing? Your cash flow is increasing. And what impact analysis is that if you have a procurement over this quarter, this is the amount of 5% you are going to pay to the government. Or in the form of an input VAT, you are going to pay somebody. So when you will recover it, businesses want to see that what is the quantum of output VAT they are going to collect. Why? Because what is the tax system? You pay VAT, you collect it from the customer, set it off, deposit the difference with the government. Getting it? The moment you have deposited, another procurement is there and you have again paid. So it means there is an X amount of cash which is going to be in cycle over a period of time. It may be good with the manufacturers, but do you think retailers are going to invest this much money in the system? Do they have the capacity for it? No. Wholesalers who are taking bulk of goods, are they going to have to get this much money stuck in the business? There are a lot of distribution companies, retail companies. The biggest nightmare is for the retail companies. Retailers, traders, they are going to have a lot of money stuck. Getting it? Why? Because when you are invoiced, you will have to pay. So from where you will pay? So businesses, as an impact analysis, need to see that what is the exact dollar figure in terms of treasury management they need, and do they have the capacity for it or no. Second, they need to see their business cycle, that by what point of time, for example, how impact analysis is done is that starting from January 1, 2018 till 31st December 2018. By the end of the first quarter, how much of the input VAT I have already paid and how much I have recovered. So can you calculate it? The answer is yes. Why? Because when the January 2018 comes, there is no impact on the business. Why? Because only a date change. Like every day, a day changes, but your business model remains same. So how it is done? It is done using the data analytics. The analytics that how you have done the sales in the past years. And based on that, the projection is done that this is the amount of cash you are going to get stuck in the business. So one sure impact which the businesses are going to have is a cash impact on business, especially when they are going to procure, when they are going to claim the expenses, when they are going to do the expense. And when they are going to recover it, they exactly need to know that by this time we will recover this money, and by the moment they will recover this money, another procurement will be there. So the money will get stuck. It means when they will get this 5%, the answer is never. This 5% will be a part of their rolling every time. They recover and they pay. They recover and they pay. But who's going to pay for the first time? The company itself. Are you getting it? The real science of it is that for the first time, the company will pay itself, and then his money will be in the rolling. Pay, recover, again pay, again recover. So the money is still stuck. So our treasury impact will be there, that we will see, especially in the vendor part, that VAT cash flow management, how it is supposed to be done. Again, the cost of the VAT implementation, that is again a big challenge. You cannot transfer it. So do your company really know that how much amount they are going to spend on VAT implementation? Will there be any cost on VAT implementation or no? Ask yourself in reality, will there be a cost or no?
There is a cost.
There is a cost. How much? What do you think? What do you think? Who should tell the company that how much is the cost they need to make a provision for it, for VAT implementation?
1800 dirhams.
The finance people. The finance people.
Registration.
Getting it? And if you find the smart people in the top management, they will ask, they'll say, okay, show us what is the cost, how you have calculated this cost. And the impact analysis exercise is highly helpful to find out and to the real impact cost on it. Getting it? So the next part is the transitional challenges. There will be a process redesign required for sure for accounting, yes. Supply chain maybe. Procurement, yes. Because the biggest impact on procurement, that's why this training is mostly focused on the procurement side. Why is this so? If you are a finance person, don't think that this is a procurement training and this has nothing to do with me. Because in small and medium-sized companies, procurement responsibility is on finance people. They have to design the policy. Getting it? So it will help the finance people to well understand that how procurement is going to get an impact of VAT. Sales and marketing will also have an impact. We will discuss it, and the information technology, how technology is going to impact, and how the reporting process will be there. And finally, if you see on the right hand side, we have the project side, that how you are going to do it. First, you have to develop a business case. So this training will also consider that how to develop a business case, what are the various areas you need to focus, how you need to bring the numbers to get a business case approved for the implementation side. How to get a project charter. Then the scope baseline is there, work breakdown structures, means the time and cost will synchronize and will go step by step and one after the other. Similarly, human resource management, communication planning, that how to communicate it to the various stakeholders. For example, you need to keep your supply chain on board. Why? Because businesses is a supply chain. If you are a manufacturer or if you are a part of supply chain, you need to sync. You need to synchronize yourself with the whole supply chain. I'll give you an example why. Let's say you are a distributor. You are not ready for that. Why? Maybe you don't want to spend money. Maybe you think, okay, we'll do it. Today you ask the business, okay, we'll do it. God is there for us. But the problem is that if any part, while having an experience in the tech side, I understand that let's say I'm a tax auditor. My primary business is to make money. I have a target. I come to a business. How the tax auditors vet a business or check a business? They don't do random sampling. They already know that in a certain line of business, what are the grey areas. So the moment he'll come, he'll ask you to take out these expenses. Getting it? He's not interested in your thousands of vouchers and blah blah. He'll say, okay, find out these, give us business 7 of these type of expenses you have done. You will find it out and give it to them, and definitely you'll make a mistake there. Getting it? Any part of the supply chain who's caught in this part, what tax auditors do, they take the whole business, the whole supply chain. Then they go back to the manufacturer and they say, how you have done this? Let's show to it. So it means any part of the supply chain which is weak will create a trouble for the whole business. So what businesses do, especially what the manufacturers do, they keep the whole supply chain on board when they are doing the tax planning, when they are doing the tax management side. We will see the communication management with the stakeholders. We will see the various risks in it and what are the specific financial and non-financial risks associated with value-added tax when it comes. And finally, the procurement management, that how it can be done and how the procurement policies can be redesigned. So this is exactly the whole scenario in one picture that you need to know, starting from the impact analysis to the final implementation and go live. And this is exactly what we are going to discuss in the whole training. Any question up till here?
Mr. Sami had a question.
It was related to the past session, actually.
Okay.
There is like 2 companies, one in free zone and a sister company. But I think already you answered. It's like the outlet factory. It's transferring the goods between the free zone and the mainland. But it's okay.
Any other questions?
We've got a company in Sharjah and Dubai.
Just a second, I'll come to you.
Thank you. If we have companies in different Emirates, for instance, Sharjah and Dubai, are you listening to somebody else or?
Sorry. Can you repeat it again?
Sure. I was just asking if we have companies in different Emirates, will Sharjah charge Sharjah companies the VAT and Dubai the Dubai VAT, or will it be all one common VAT?
No, it will be a common VAT.
So we can just get one registration for all companies in the UAE.
Exactly.
Okay, great. And that includes if we wanted the free zone as well. So
Sorry, do you want it?
if we wanted a free zone company in the same VAT thing, will that also?
Then you will have a problem. The answer is then you will have a problem in it. I believe there will be a solution to it because still the ambiguity is there. The government in itself is going to make a decision for it very soon, because this is the most often asked questions with the economic ministry, and they almost always duck it and they say, okay, we're looking at it because it's practically not possible. Keeping them out and then bringing it to the same company, if it is not taxable. I'll give you a very interesting fact. Rather, I will give you a food for thought. If you are buying from a non-VAT registered vendor, who is a non-VAT registered vendor because of the registration threshold, which is 375,000 dirhams for companies, and below that 187,500 is the voluntary registration. Below 187,500 companies cannot get registered. If my annual turnover is 150,000 and I'll apply for registration, my registration will be declined from the government. System will not accept it automatically because registration will be online. They'll say, what is your turnover? It's 150,000, they decline you. This is sorry, you do not fall in the category and requirement of the basic threshold for voluntary registration even. I have a very interesting question. Suppose you are not registered because you don't have that much turnover. And I'm going to sell you a product which is subject to VAT. Can I charge you VAT?
Yes.
Yes.
Think again. Try to understand this question. It's not that easy. What the question is difficult. I am a non-VAT registered, legally non-VAT registered because I do not have that much turnover. Agree? I am selling you a product which is subject to VAT. Can I charge you a VAT? The answer is no. Okay. This is exactly what I wanted to listen because this is the starting point of the trap. Okay. Okay. If I cannot charge you a VAT over a VAT taxable product, then it is better to buy from non-registered vendors. Isn't it good? Don't buy it from those who are registered. Buy all of it from those who are non-VAT registered. I'll give you the answer of the first question. Tax is not on vendors. Tax is on product. A taxable product cannot be sold without collecting tax. It's an offense. A product subject to VAT will always attract VAT whether you buy it from a registered vendor or a non-registered vendor. Getting it? Because if this is the case that the non-registered vendors sell it and don't charge VAT, everybody will give a call to the non-VAT registered and say, why don't you sell us? Why? Because you don't charge us VAT. So they will charge VAT. They will take it from you, they will deposit it somewhere, getting it? Or maybe the line before that means there is another way how it is done in tax. If I'm selling to a non-VAT registered, maybe I will withhold the tax. Getting it? I'll withhold the tax and I'll give it to the government. Why? Because at certain point of time, the chain has stopped. The chain of registration, all registered claiming input output, at certain point of time, the chain ends. The last party where the chain ends, he's supposed to withhold the tax and deposit it with the government. Getting it? So it means all those non-registered vendors will, in their procurement, they will pay VAT. And your VAT is already deposited with the government. Why? Because the price which is written there, they have already paid the VAT on behalf of you. You will have to pay them VAT. Why? Because the VAT they paid is a part of their cost. So they are recovering cost from you. So are they in the system? The answer is no. So how they collected it? They have already paid VAT to the last supply chain or the last chain in the supply.
But if they are the direct importer?
Sorry?
If they are the direct importer, without having a tax,
then do they have a threshold of less than 187,500 if they are importers?
Yeah, if that is the case, then if they have threshold of, like, if you are not for, if they are
it is practically not possible. I believe if you go to a grocery shop, their turnover is more than 187,500
they will have multiple products
in one whole year.
No,
yeah, if I have a company,
Yeah.
like after if I reach the threshold, I'll close the company and I will open another company to save that possibility is not there.
After the training, please meet me. I'll try to learn something. I don't know the science. Close one and open the other, close one and the other. I have no knowledge of this. So I cannot answer this question. The one thing, what I have learned, the system is so vulnerable that nobody is going to check what you are doing. Yeah. For years, nobody will check. But one fine day, somebody will check it. Before that, try to find something else, either a new company or a new job. Getting it? So the best policy for VAT is the honesty, because mistakes are acceptable. But evasion is a crime, and evasion is punishable, not only in terms of money, but in imprisonment as well. Getting it? The same legislation will come, the decree will come along with the VAT, that they will say that all those who are the abaters of it, abaters means all those who has helped the companies in doing it, they will also go behind the bar. Getting it? So don't think about new companies. Alright, so we will go a little back. I just want you to see that how accounting is done. Before that, I would like you to see how VAT is calculated. One thing I want you to know and remember, when we say zero rated, we are only talking about when it is sold to the final consumer. Getting it? It's a difficult phenomenon. Try to understand this. I sell an exempt supply. Let's say what I sell life-saving drugs are exempt supplies. Getting it? I import the life-saving drugs, no tax on import, fair enough. I sell it to wholesalers. I will charge VAT on that. On what? On life-saving drugs. But life-saving drugs are exempt supply. It does not make any difference. The product, unless it is being handed over to the final customer or the final consumer, the product is taxable. Getting it? So any product which is an exempt supply is only exempt when it is being sold to the consumer. To the consumer. Before that, the entire supply chain will charge VAT on each other. Right? So that's a very interesting phenomenon because businesses are very happy when we sell exempt supplies. You sell exempt supplies, but there is a tax on exempt supplies. Unless only point of exemption is when it is sold to the final consumer. I will show this to you through accounting. If you understand this accounting well, you will be able to answer a lot of things. See this slide. This is also available in your material as well. First, take a quick look of it. Who sold home? In the first instance, who sold home?
Manufacturer to distributor.
Manufacturer sold to the distributor. What was the price? 10 x 0.5. How much was the sales price? 10.5. This is an output VAT manufacturer collected from the wholesaler and deposited with the government. So how much amount is deposited? Up till there, 0.5. Distributor sold it to retailer for 50. 5% of 50 is 2.5. Sales price of 52.5. Now see what happened. Output tax for distributor was 2.5. Input tax which the distributor has already paid to the manufacturer was 0.5. The distributor will deposit $2 with the government. Right? Retailer sold to the consumer 60. 5% is 3. 63 was the sales price. Retailer has already paid 2.5 as a VAT to the distributor, and he has collected 3, so he will deposit 0.5. So what was the last selling price? 60. How much government calculated? Just collect the red figures. 3. And this is an example of standard rated products. This point is clear? Go to the next one. Here we have 0 rated. Take a quick look of it and see what happened. Interestingly, in the green, it's just 2.5. How much amount remitted to the authority? Nothing. Why? It's a 0 rated product. Again, the same story. Manufacturer sold to the distributor 10, 0.5. 0.5 is the output tax. Distributor sold to the retailer 2.5, claimed an input VAT of 50, deposited 2. Up till here, 2.5 is already deposited. But when the retailer sold it to the customer, he did not charge any tax. So did he get any output tax? The answer is no. How much input VAT he has claimed? 2.5. It means there is a very interesting fact here. On 0 rated product, will the retailer pay the VAT? The answer is yes. Retailer will pay VAT to the distributor. And who will claim the input VAT from the government? Retailer will claim an input VAT from the government. Hope there is no rocket science in it. Third part is very interesting. See this carefully first yourself. If you have any question, please ask. If you won't ask, then I will ask you a question. So better you ask, so you get an answer.
Sorry, to understand your question on the end part of the retailer. So the retailer has sold it on with no output tax because it cannot to the consumer. paid input tax to 50, so it essentially is paid back to the distributor, and then from the government he would get 250 back.
The answer is no.
The retailer,
No, no. If you see, it's very clear, the retailer neither paid nor collected.
Retail has paid.
But the question is, did the retailer pay? The answer is yes. Had the retailer not paid, how the distributor has got an output VAT of 2.5? So where did he get? If you see, the distributor has got a VAT of 2.5. And retailer is going to swear that he didn't pay any VAT. See, how much amount is remitted to the government? The question is, these slides are very interesting and important. You need to understand that who is going to claim the final money from the government. If you go back and see, retailer was claiming. If the chain of supply is going on, nobody can claim a refund. Refund means nobody can claim anything. What they need to do, collect money from the next one, deduct what they have paid and deposit it with the government. Getting it? So there is a rocket science in it. If you see this one and the previous one, I am showing you the previous slide. See it carefully. In this slide, the retailer claimed the input VAT here. That's the green. Why? Because it was a zero rated product. In this, there is a catch. The catch is that this person is swearing, I didn't pay any output VAT, I didn't pay any input VAT. Why? Because charging any VAT on exempt supply is again a crime. You cannot collect any VAT from the buyer. Why? Because the product is exempt. But distributor is saying, I have collected output VAT of 2.5 from whom? From retailer. So here is the entire catch of an exempt supply. In exempt supply, retailer paid the input VAT, but as a part of his cost. Getting it? The amount of tax which the retailer has paid as a part of its cost, the distributor deposited as an output VAT. So the entire disconnect in the supply chain comes here between the last seller and the last chain. Did he pay? The answer is yes, retailer paid. Retailer paid 2.5. Why? Because the distributor is saying I have collected 2.5. But retailer is not going to claim any VAT and not going to tell the government that he has paid any VAT. How much? The entire amount is with the government right now. And this is the most difficult part in the exempt supply. A lot of, especially the companies who are in the retail business, they will sell a lot of goods which are exempt, zero rated and retailers. So they will face this nightmare. And the biggest problem is that the tax auditor, when he comes, interestingly, he looks at it, but he does not actually look at it. He looks at the cost part of it. Right? So it means the tax planners and the finance people need to see the segregation of cost as well. Take an example. You bought a raw material. You made some of the goods exempt, some zero rated and some standard rated. Getting it? How you are going to classify the cost of it? I'll make the question easy. Would you like to transfer more of the cost part on zero rated, exempt or standard rated? Where you will try to put most of the cost of it. If you are given an opportunity and you just think that the only God is seeing you and nobody else, where you would like to transfer it?
Standard.
Again, a choice between a standard rated and an
Zero rated.
and zero rated. Why? Because zero rated, there is a danger of being caught easily. You are claiming an input VAT, government knows you are claiming an input VAT. On the back end, if you think that you are claiming VAT and nobody is looking at it, you are wrong. Why? Because government authorities are seeing, they know the industry benchmarks. So whatever amount you are claiming as an input VAT and you are classifying a cost part on it, they know that you are putting more on it, and this is the catch. This is the starting point of a tax audit. Getting it? So what's the safest way companies will do? They will transfer most of the cost to the standard rated products. And the first thing a tax auditor will come and say, okay, I need to see the cost classification, how you did it. That's it. If you believe the whole tax audit is not more than a day-long problem. Why? Because they know what to see, they know what to focus, they know the gray areas, they know where the companies will make the mistakes or where the company will save the cost, because this is the part of tax planning. I told you from the first minute, tax is not an art, it is a science. It has a definite answer to things. It has definite ways of doing things. Why? Because there is no ambiguity. Practices are there, but the question is what need to be done and what not gets clearer and clearer over a period of time, right? Any question up till here?
Can you please go back to the zero rated supplies?
Yes.
See, you have told like the VAT is charged on the product, not by the supplier, right? If it is zero rated, how come the VAT came in here?
It is zero rated at a point of sale.
Yeah.
So when you are selling it to the customer, retailer is selling to whom?
End user.
How much he charged to him? Zero.
Yeah.
How much he has already paid? 2.5.
Yeah.
He will claim this 2.5 from the government back. That's green.
But how come the distributor charging VAT to the retailer when it is a zero rated?
This is exactly what I told you. Do not get misguided with an idea that we are selling. I'm not talking about even the zero rated. I'm talking about the exempt supply. Even if you are selling a life-saving drug, which is an exempt supply, starting from the manufacturer till the retailer, everybody will have to pay VAT. Goods are exempt for final consumers, not for the supply chain. Getting it? That's the problem. Otherwise, what is the problem with the exempt supply? Why people cry when they are selling the exempt supply? Because they have paid a huge amount of VAT during the whole supply chain. Otherwise, it's a blessing in disguise if you are selling an exempt supply. Why? I'm selling an exempt supply, neither I pay nor I collect. No. If you are selling an exempt supply, every time you pay, but you cannot collect anything. So all the tax in the supply chain you have paid is a part of your cost. And when we say exempt, we are only talking about the final consumer who is going to consume it. I'll give you an interesting example. Let's say meat, raw meat. It will be, what do you think, a zero rated or an exempt supply?
Zero.
Okay. How this is done? This is something again very interesting. If you are going to buy edible oil, if the edible oil is open, he weighs it, measures it, and put it in a shopper on a polythene bag and give it to you. There is no tax. But if the same edible oil is in a bottle, there will be a VAT on it. If a cake you are going to buy from a factory, it's exempt from tax. There is no tax on it. If you are going to buy the same cake as a packaged item, there is a VAT on it. The same product, which is a basic food item, when it is branded, it is a product, and it is subject to VAT. Right? So I'll tell you the interesting fact. If you buy the meat from Carrefour, do you think they are going to charge you VAT or no? Because meat is a basic food item. If the brand comes, yes. If it is open, no. But if the same meat Burger King is going to buy, it's not an exempt supply for them. They will have to pay VAT on that. Why? Because they are adding value to that product. They are not the final consumer of it. This is their raw material. They will have to pay VAT on that. Getting it? So this is the way how it operates. So the moment it comes to you, when you listen this, you say, okay, exempt supply. Exempt supply is a point where the consumption will come. No further value addition is possible. If it is possible, then it is not an exempt supply. There will be a VAT on exempt supply. Hope this point is clear. Yeah. Any question? Yes.
If the retailer is not registered, then he can claim the refund.
No. He is not in the system. His money will be collected by the partner in the earlier supply chain.
So the distributor will withhold that amount and he will.
Yes, exactly. He will not withhold. He will collect it from the person and he will deposit it as.
In this case, when there is a refund, so the distributor will collect the refund from the government.
In which case, in zero rated or exempt supply?
Won't be
No, zero rated. Because he is paying, but the end result is there is zero tax.
In this case, it's a simple situation that the retailer will claim the entire refund. what he has paid to the distributor. If he is not registered, then he cannot claim.
He cannot claim. It's not clear.
That means there is no refund from anybody.
Interestingly, if the product is being sold zero rated, then who will claim the refund? The distributor will claim the refund. Yes, of course. Because for that tax purpose, they don't know anyone in the supply chain ahead. For them, the supply chain ends at distributor. Right? Any question? I'll ask you a question. But I'm not going to answer this. I want you to think about it. The question is, if you buy from a non-VAT registered vendor, you cannot claim an input VAT. What if you sell to a non-VAT registered vendor?
Once you're reaching the you'll change.
Did you get the question?
Get a new registration.
You buy from a non-VAT registered, you cannot claim an input VAT. What? You are registered, but your buyer is non-VAT registered. And he will use the product for value addition. He is not the consumer of it. He will use the product for value addition. My question is, can you claim an input VAT against an output VAT?
You can sell it to the consumer.
You know, in an invoice, when you are selling, you have to write that your number on your invoice is printed, and the person to whom you are selling, his number is also there.
The consumer
Do you know this? In an invoice, both the person, the buyer and the seller's numbers are there. So what if you are selling to somebody who is non-VAT registered vendor and who is your part of your supply chain? He is not the end customer. He will process it further. Okay, so I'll keep the question open. Think about it. The answer is not as easy as you are thinking. Think about it. And just give a due diligence to it. That when we buy it from a non-VAT registered, fine. But what if we sell to some non-VAT registered vendor? And especially for the value addition purpose, can we claim an input VAT against that sale? Yes.
Actually, I think you have to claim the VAT. You have to claim the VAT because he is part of the supply chain.
Okay.
But he is not registered. So it is you at the source to withhold that tax on behalf of the government. If you don't, then you will bring that along the system and you can.
All right, great. Very nice answer. I've just given you the answer. He will claim the VAT from the non-registered vendor, and the government will assume it as a consumption. Why? Because the supply chain ended. And the last seller means if it is distributor, at this point of time, government will assume that the entire amount has been collected. But this was not the real catch in it. The real catch was that what if he is further processing that product? Why? Because non-VAT registered person will also further process that product. And they will bring it in the market with their own name, but they are not VAT registered vendors. Bring it. And this is the part of the tax plan. Means this is what the idea that opening a new company and a new company, that's how it's going to work. Getting it? That's the idea of saving tax. Alright, with this I will ask you if you have any questions, if you have any queries, please feel free to ask because we are going towards the end of the session. So anyone, any question, anything you want to ask?
A question.
Yeah.
If I buy at 100, sell at 80,
Yeah.
okay, expecting a discount or no retailer rebate from the manufacturer, how do you treat?
Can you please ask? I couldn't get the question.
Yeah, a distributor imports a product for 100. Yeah. A distributor imports a product for 100 and he sells at 80, expecting a discount from or no retailer's rebate from the manufacturer. So he pays VAT on 80 or 100. How do you?
So he bought for 100 and sold for 80.
Yeah.
Must be doing it for some charity purpose.
No, he will be getting a distributor's rebate.
Oh, I'll tell you an easy catch of it. Okay. I'll tell you the tax evasion technique in this. What companies do? There is a product which has a price of 100. Right? I will make a contract with my supplier, with the distributor. I will buy 2 million products from you. If you sell it to me for 60, what is the market price for which I should have bought? 100, right? But I am doing this contract for 2 million products, which from the day one we both know I will not buy. And you are giving me a massive discount of 40 per product. So how much of an amount you will generate of invoice? 60. So how much tax you will pay on 60? But the contract contains a penalty term. The penalty says that if you did not buy 2 million, by the end of the quarter or 6 months or a year, you will pay penalty to me of X amount, which is actually the difference between 60 and 100. Getting it? I have a question. Is it a tax evasion? You generated an invoice, others are selling it for 100. Tax auditor came and said, well, what are you doing? Why you have created an invoice for 60? You said, we have a contract. You said, but he did not buy 2 million. That's why he paid the penalty. And penalty is not taxable. That's the important part. If he pays a penalty, it's a part of the contract, but it's not subject to VAT. Tax saved or no? Yes. Crime, mitigation or evasion?
Mitigation.
That's the right answer. Depends on the sighting of moon. Depends on what exactly he thinks. But around the world, this is tax mitigation, not evasion.
Very good.
And there are 101 techniques like this. Simple, easy technique. You can save a lot of tax. Getting it? So I think this is what you are asking. So I have given you a better example of reducing the tax. So you ask this question, I'll keep on giving you things like this. Yes, please go ahead. Any?
Elaborate on this point. This is just from the supplier. What happens if an actual discount is given?
Does the discount attract VAT?
No.
No.
No, I'm saying that if in an actual case, due to market circumstances, a person is supposed to sell it at a discount, then what is the VAT percentage? How will it be treated?
So sorry, again, what is the exact point which you are asking?
I'm saying a person is, due to market situation, company closing down or something, he is forced to sell at a discount. He is purchased 100.
Fine, if he has a justification of it, the government has no problem with it. If he can justify it, fair enough. He is closing down his business. He is selling everything at a less than cost price. This is business.
No, so how do you recover what's the VAT applicable? He'll charge VAT only for 60 and then he'll recover it?
He will charge VAT on 60
No,
and that's a tax loss. And tax losses are allowed when you are closing down the business.
No, does the revenue authority refunds the VAT?
Yes, they refund the VAT. If there is a tax loss while closing down the business, they refund you the money. Any input VAT that is claimable, that is your refund, and they'll give you back the money because you're closing down the business. But if you have done the same thing because of the seasonal impact, then it will be very difficult to justify it in front of the tax authorities that you did it. Because if it's a market trend, everybody is doing it, then it's fine. If you're doing it alone, you will be in deep trouble. Yes.
If your customer run away from the market, what will happen? Can you refund?
If you run away from the market.
Bad debts.
The customer, yes, bad debts, on bad debts you can claim. Because in your tax column, in your tax return, there is a bad debt column. So if there are bad debts, you can claim an output VAT against the bad debts.
We then prove that there is a bad debt.
Yeah.
Like
You will have to exactly report the amount and the customer name. And next time when you will return, any point of time when you get the return back, get your money back, you will have to report it again. Bad debts are allowed, bad debts are a part of VAT because everything which is in the business is in VAT. So they allow you an input VAT refund claim against any bad debts or set it off against the output VAT. Right, with this I would like to thank you very much for being so patient. Yes, please. Exports are zero rated. Yes, you can claim all input VAT in that. Right, thank you very much for being so patient and listening to with a lot of diligence. Thank you, hope to see you soon.
Thank you everyone. Please do give your feedback form at the exit. Our consultants will be there to collect it from you.
You can ask. See, he should have presented on zero rating. If you talk about services, then only I'm not. It's just Yeah, ask him. Nothing wrong in asking. But I don't know whether he has an answer.
Okay, man. Nice to see you. And all the best. I think you're more knowledgeable. Place it on the table there. Okay.
I'm giving the feedback.
Yeah. Thank you. Thank you. Yeah, sure. Thank you. Thank you.